Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Thursday, January 21st, 2021. And here are our top stories. London hedge funds see a post-EU threat and hedge funds struggle in China. Well, joining me now to discuss this and a lot more is Tucker Piner of Bloomberg. Tucker, Happy New Year. Great to see you. Thanks for joining us this morning.
Hey, Jeff. Good morning. How are you, sir?
I'm doing great to see you. And I should mention that you kind of oversee and work in the alternatives and European mandates. So it's great to have you. Really important topics here. Tucker, let's jump in because we had Brexit and that theoretically pulled apart the UK from the European Union. But London hedge fund managers are still having some challenges when it comes to the European Union. And you're the guy I want to come to on this. What can you tell us?
Yeah, we had a lot of drama to end the year. The agreement was reached, but we're still dealing with the fallout of what that means for industries like the financial sector. So on January 29th, we'll get some more clarity. But what a lot of the speculation is now is what's going to happen to all the assets that managers are based in the United Kingdom, but their assets are parked abroad and typically in Luxembourg or Ireland. So you've got about 1.4 trillion pounds of assets, so about $1.9 trillion that are overseas. They're structured in different Luxembourg funds or UCITS strategies out of Ireland. And it's going to be interesting how the EU and the UK negotiators work out what happens to those assets.
So the issue is not necessarily with distribution. It's about where the fund managers actually reside and where the portfolios are managed. As an expert
Exactly.
Thanks for that, Tucker. And as an expert in hedge funds and alternatives, I mean, what does this mean potentially? Because we don't know. You said January 29th is the date that we're going to find out some more regulatory guidance. But what does this mean potentially to the management of these portfolios? I mean, does it create more difficult? I would think it creates more difficulty because you have more regulatory hurdles and therefore more fees, et cetera.
Well, it's just a lot of confusion, and the law firms are definitely going to rack up some of their fees. But for the asset managers themselves, Jeff, this is nothing new when it comes to what we're talking about now is outsourcing or delegation, which means you've got a fund that might be resided in London. It's up on Mayfair, and they've got their office there, but the actual legal domicile of the fund is offshore in a UK or in an EU country. And so now the regulatory bodies are trying to decide what's going to happen next for them. There's the nuclear option of the EU mandating that if you want to have your assets in the European Union, you would physically need to have an address there. There's going to be a lot of cracking down on what's called letterbox firms, meaning that it's pretty much just a postcode, and you've got no people there. It's just a place for you to structure your fund there, get the tax benefits of having your fund there, but all the capital and all the assets and all the benefits of that fund would be in the UK. So that's something that the EU negotiators and the Commission are looking at aggressively now. No one thinks this nuclear option is going to happen where they move managers, but to answer your question, it is on the table.
Yeah, I can't imagine. I mean, I guess I could imagine in today's world that there's a whole
Brevin Howard gets shipped over.
Yeah, I mean, it's just hard to change over. But we're talking here about hedge funds, Tucker. But does this also apply to traditional fund managers that are domiciled maybe in the UK that maybe have assets in the EU? I mean, is this something that those shareholders maybe in London or across England might have some concern as well?
Without a doubt, it's going to impact your BlackRocks, your Allianz, a lot of our retirement funds, which are tied up in institutions that may have UK offices, but then again, where those assets within the fund where they're actually managed, it's going to be up for some controversy and some decision making and power struggles. It's going to get very political, I think. At the same time, though, Jeff, it's good for both parties. Just this investment alone of all this asset management activity in the European Union, it's brought Luxembourg up behind the United States as one of the second largest financial cities and countries in the world. And so it's definitely, they don't want to come too hard on the UK market and penalize them for Brexit because of this, there's so much benefit for having all this financial activity already existing. And if that was to be altered in one way and the UK said, okay, we're doing no business there, it would be devastating for those EU countries. So we'll see what happens next.
Yeah, and if it's devastating for those countries or companies, excuse me, and doing business there and having to, you might think about raising fees, you might think about the damage that it could do to your portfolio. And if I'm an investor, whether I'm an institutional investor or a individual investor, I have to kind of plan for that. You mentioned Brexit, and I guess, you have the luxury of being in London, but you also are from the United States. I think North Carolina, when we chatted with you, you were actually up in a winter home. What has Brexit been like within the financial services industry? Is this just one of many issues that are being wrangled with?
Definitely. Brexit is this ominous word everyone throws around, but the actual day-to-day impact hasn't really been felt in the financial market yet, or in the financial services industry. Bloomberg hasn't really been impacted significantly. Our database, we're trying to figure out how we'll structure our database based on regulatory requirements. But at the same time, the problems with Brexit was because it wasn't all figured out before this agreement was reached. It was a lot of the saying, all right, we'll create committees that are going to figure out how to implement these new changes and how we're going to do business with the United Kingdom and with Europe. The big fallout I've seen personally is, the grocery stores. There was risk there'd be a shortage of certain supplies and certain types of foods that wouldn't be able to make it over here from France, or the ports were backed up for miles or kilometers here, and that was a huge issue as they were trying to figure out what would happen through Brexit. Fishing was a massive controversy that's still going on. But yeah, to answer your question, the financial industry is still kind of figuring it out. There hasn't been a major impact, but there will be.
Well, yeah, I mean, I think these things, I don't think you can ever dot all the I's and cross the T's in advance of things.
Sure.
I think there's always fallout. There's always things that you haven't thought about. You could have the smartest people in the globe, working on an issue, and it may not resolve the issue. Tucker, what about travel? Last question, before we go to break is, I know you all are dealing with COVID. We're dealing with COVID here in the States. What about, does this potentially impact travel? Say if you want to go travel to the French Riviera, which I know you love to do sometimes.
Oh, yeah.
But in all seriousness, does this have an impact on travel outside of the UK?
Brexit doesn't at the moment. The only impact obviously is pandemic related and certain restrictions on testing protocols and quarantine requirements and things like that, which will be in place for a while. In terms of Brexit impacting travel, not as much. There is this concern that the passporting ability, meaning if you're a UK national, you could go work in Paris or in Brussels and be able to just treat the European continent like a place that you might want to do business anywhere, not need a work-sponsored visa. I'm currently on a work-sponsored visa because I have a U.S. passport holder. I'm working in the United Kingdom. The UK had the luxury of being really able to work for most places without that, going through that red tape of getting legally approved to work in these countries. That will definitely have some impact, but it still hasn't been decided what that's going to be yet.
Well, more to come there. Well, Tucker, I want to take a quick break, and while we have you, when we come back, we'll turn our attention away from the UK and the European Union, and we'll talk about China. It's another area where global hedge funds are struggling. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate copays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back. We're talking to Tucker Piner of Bloomberg. Tucker, thanks for staying with us this morning.
Yes, sir. Thank you.
Well, let's shift gears from the European Union and the UK, as I said in our outgoing to the commercial, and let's talk about China, because China is kind of a sore spot or an area where global hedge funds are also struggling, Tucker. What can you tell us there?
So there's a lot of excitement last year around September. The qualified foreigner institutional investor proposals were pushed out. In November, they went into effect in China, in mainland China, opening up things like derivative trading for outside investors, for foreign investors, and investing in private funds, which is what they call hedge funds. After the financial crisis, the term hedge fund was very taboo within the Chinese market. There was a lot of backlash. Even today, a lot of funds within China that we create on the Bloomberg terminal don't like to be called a hedge fund. But so there's that perception that we're having to deal with. But what you're referencing is this new wave of or what was optimism for being able to take advantage of investment opportunities in China. Having said that, though, what we're seeing within the last few months is that it's still being dominated by local firms, local fund managers, the relationships with the institutional investors within China. And not only that, but the performance has just towered over any sort of outside firms that want to invest and run funds within China.
Now, I mean, does that kind of fly in the face of openness? I understand. So let's pick this apart for a second, because one, there may not be familiarity with the brands. So there are other brands outside the U.S. Outside of China, the Blackstones, the Cambridges, et cetera, right? That they have really well-known brands here, but they might not have a well-known brand there, especially with the distrust. But is brand an issue? And then I want to ask you about the openness, the transparency, the or lack of transparency in some cases in China. Does that present an issue?
From the branding perspective, I think it's a massive issue. There's the obvious language barrier, which you and I are aware of, but you can still be successful, and you're going to have local speakers and local people with the ability to market your funds there. But the Chinese investors, they're definitely more reluctant to work with people that, it could be a star trader, it could be a firm that is world famous, but if it doesn't have a reputation like that in China, they're not going to be as willing to allocate capital to you or to really want to take a meeting with you. And so I think it's definitely a branding issue that's hurt them. But at the end of the day, we're talking about hedge funds, Jeff. Everything comes down to performance. Everyone's chasing alpha, and whoever can deliver on those types of returns will get a seat at the table. Now, you talk about openness or transparency, and what the policymakers are doing in China is really they've promised a lot of this openness, but some of those ability to use certain asset limits, that foreign managers are restricted on, has hurt them, because depending on the strategy that you're running, if it's a distressed debt fund, you're going to need a certain level of assets to even be effective in that strategy. And if they're capping that ability to raise assets, then you're not going to be able to be as competitive, and you're not going to be able to produce outsized returns. And that's what a lot of foreign managers are coming up against in China.
Tucker, when it comes to who's investing in China in these types of products, whether they're private market products or if we call them hedge funds or private equity, is it family offices? Is it institutional investors? Are there individual investors? I mean, how would you just define those allocating to private markets?
Yeah, it's definitely the pension funds, big time. But then everyone from your UBS and Citigroup and those types of players that want to have exposure in the alternative space. They want to have exposure in the Chinese markets. They see the massive upside, but at the same time, they're not on the same level playing field as their local competitors, even after these new rules have been announced. So I think from their opinion, they would say that contributed to their inability to be as successful as their local competitors. From the perspective of the Chinese funds, they might say that it just comes down to they're outperforming them. So we'll see how things look a year from now. We should definitely continue the conversation, because it's something that we're going to be monitoring. And my counterpart in Hong Kong is also closely monitoring the situation.
And, is this something that, in terms of the government, I mean, is the government wanting perhaps to limit the amount of outside funds? Is that part of this? So, for example, why not take this money and allocate it towards Chinese-based companies or Asian-based companies? Could that be? I mean, obviously we can't get in the heads of the Chinese government, but I'm just asking you based on what you're hearing from consultants, advisors, and other people in the space.
Yeah, I think their intentions are good, and what they're trying to do is balance growth while managing risk, and they want to make sure that things like the financial crisis don't happen, and that the Chinese market isn't ripped apart by certain types of funds and certain types of strategies. And as we know, private markets is less regulated, and so I think they see the potential, and they see that allocators are eager to be a part of the Chinese market, but at the same time, they want to protect the Chinese financial system. So I think that's really where they see it, is balancing growth and managing risk.
Yeah, and last question, Tucker. When it comes to performance, because performance is everything, as you said yourself. How do some of these more local funds do relative to some of their global peers? I mean, there are smart people everywhere. There's information that they can glean from systems like Bloomberg and elsewhere in order to understand the market. So how do they perform relative to their indexes and to their peers?
Yeah, so the Asian funds, APAC across as a region, outperformed EMEA and specifically the UK managers by about 6%, and also outperformed the US peers by equity strategies and credit strategies and global macro strategies by about 3% of their US peers. So the local funds are definitely performing. They're producing alpha, and that's what's attracting so much attention. It's just if they're going to be successful in capturing that outside capital, that foreign investor money, will remain to be seen.
Yeah, well, it's always interesting. No matter where you go on this planet, it always comes down to performance and fees and what you're going to give to your investors. Tucker, it's always a pleasure catching up with you. Really appreciate you making time out of your busy schedule, because it's not morning where you are. I think it's actually afternoon or evening. So we appreciate your time, and we look forward to having you back on the program very soon.
Thanks so much, Jeff. Take care.
That wraps up this episode of BRN AM. have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out our daily newsletter, The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Waiting here for you to take and drink of. But if you're tired for the same.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.